Hello guys, how are you doing on this fine day here? Sunday, and yet another week lies ahead of us. And I just wanted to show some of the signals that we have gotten last week and how to play this. And there's actually 3 oil stocks with some pretty good outlook. Again, oil. I think oil 2026 will be, at least there's a good opportunity for it to be really good. So we shall see. But these stocks here, at least one of them, has been doing a pretty long-term breakout. Um, and these guys, they pay heavy dividend. Remember that. They pay heavy dividends. So, as always here, check out the uranium update that I did on Substack a day ago, where we go into ETFs, ratios, and all that good stuff, just to see where we are. And are we still on track? According to me, yes, we are, even though the past 4 weeks or so has been pretty stressful. But hey, that is the name of the game for for commodities. A lot of good stuff here as well that you can check into. It's all on the Substack. And also I did an interview here with one of the subscribers from Substack. Check out his YouTube channel. It's basically mostly in Dutch. However, this one is in English, and we talk some uranium, we talk some gold, we talk a little bit of everything there, basically. So, good. With that said, before we go into the signals, I also wanted to show you here the QQQ on momentum 200 day, which is rather long term. And you can see here, we are actually losing a support in momentum. We've barely regained it. Again, depending on how you measure or how you put up the trend line. But you can see here, it needs to recover very quickly in order not to lose long-term momentum, and therefore have kind of like a reset, moment in momentum where we reset things into the 200 day. So interesting here for the QQQ. If this is a false breakdown, of course, then again that is very bullish. But for now, let's see what happens, right? It's very tricky to note here. We're basically testing or back testing now, so we shall see. Speaking of, this is the Friday's candle, and there were, at the end of day, like 2 hours before the close, a lot of things started to actually see some bullishness to it. Again, it's pretty early to call that, but uranium stocks kind of did a little rally. The QQ did, Bitcoin did a little bit, so we shall see what happens there. But it was definitely an interesting close for the markets. Good. Let's start with a more speculative stock, right? A more speculative stock, and that is TUN, TUN, which is tungsten. This one here is only 20 million. It's a baby stock. However, we are now breaking this flag here, which comes after like a cup and handle bottom structure there, right? Where we're breaking out, we're doing the back test, and now we're gonna rally again. So I took a tiny position here in TUN this Friday, and my target, the measured move, is 42. However, I want to move it down to that high there again, to 33. And then I'll take it and leave it, and then that it is what it is. It's just a small kind of trade, but again, this could go rapidly. This could take a few months maybe, and then we could be at those highs. And again, from roughly 10 to basically 33, not too bad. And you can have a stop below like 9 or something like that, and you should be good to go. And even if you do the entire flag, the stop loss below the flag, you're getting out there at like 7, so you're still having really good risk reward. Again, disclaimer, it's a very small stock, so don't put your entire nest egg into this one, because you will be smoked over time. And just a tiny tungsten play here. Again, my default play now is to get out at 33, but again, depending on what happens, we might only sell half. We shall see. We shall see on tungsten. Here we have a big player, right? 20 billion oil EC, that is integrated oil, dividends 16%, according to TradingView. 16%. That's a lot. That is way higher than the inflation. So just to hold it, you're getting paid more than inflation, right? So what are we looking at here? We are basically looking at a 10-year wedge which is one of those we have been watching for quite a while. And we have been watching that blue line coming down. 4 years of trend line, of resistance, you know, 4 years of resistance finally getting punched through. Again, this is a long signal. This is a very, very long signal. And you can see here the highs of 2022, 2024, 2025, boom. There it is. There it is. Again, we might chuck and churn here a little bit just to kind of, you know, get out of that whole, you know, downtrend and clear some highs. But this is a long signal in a dividend stock that you can actually hold for many years to come. Stop loss wise, I would just play it below the golden here. So anything below like 8, you're probably out. You're risking 20. 20% sounds like a lot, right? Risking 20% in a trade. However, or like investment. However, this screams, at least in my playbook, that, hey, we're going to go to here, you know the deal. We'll probably pull back, and then we break on the 4th. You're having a decade-long breakout in an oil stock that will take you way higher. First major target would be the triangle highs up there, right? This one there, but also there will probably be some sort of pullback here at like 20. You have a big like sell-off going on there, 2020. You regained that, and you haven't been above ever since. So again, there will probably be players, you know, selling out at roughly 20. But again, you can hold this one for basically 3 years, in my view, collecting, you know, 10, 15, maybe 20% if they increase. And the risk reward is quite neat in my book. This is one of the good ones in my picture here. Whoa, that's a very low stop loss, right? That wouldn't be so good. So let's do this. Sorry to be all over the place. So stop loss somewhere around there. You're risking 17%. And then again, if we just take the highs from here, you're getting 10 to 1. If you just take that high, you're getting 10 to 1. While you collect 16% dividend, good risk reward here, 4-year breakout internally. I like everything that I see here, to be honest. Again, talking probabilities, in my view, EC is a no-brainer right now, an absolute no-brainer. And you don't need to do a whole lot here. Again, this is like a three-year play, and you just while you wait to break out from the bigger wedge, you basically just collect the dividends, right? Really cool play in my view. Easy in oil, easy peasy. Same thing here. We have SCR, which is also integrated oil, 3% dividend. But again, just look at the beauty here, really. Different kind of setup. But you can see here we have basically like a resistance zone here at all-time high between like 100 and 110-ish. And I believe we are going to go back to there now. Yeah. I do believe this one will go to 100, sitting at 40. And the reason is we have this kind of like, can we call it head and shoulder? I guess so. It's not the best, it's not the worst. Neckline, borderline too steep, but I still think it's valid. But anyhow, we have been breaking this kind of, you know, bottom pattern here, and that broke out at 32. Rally, flagging, breaking out from the flag here. I still think this is a good entry. Upon this flag break here, which was last week, we can measure from the bottom to the top, and we are actually getting close to this kind of like breakdown level up here. If we draw the line and make it red, you can see that, hey, back in the day, 3 years ago, this level here at roughly 63 seems to be like an important breakdown level there. And you can see we actually had a little bit of a wedge going on there around that level, and then we finally got smoked right around $50, which also is probably a little bit of a pit stop. The big 50 level here, you can see the breakdown backtest here, so I'm expecting like a pause at 50, but ultimately we could see 60 in SCR, just based on this kind of pattern alone. So still here, again, I like it very much here, to be honest. Stop loss wise, again, we should definitely check out the stop loss, how that could be played. long position, we are long here. We could place the stop below the bull flag if you want to play it somewhat tightish. Whoa, excuse me, like that. We're gonna do this, right? So this is 13%, and we are targeting somewhat 63, so you're getting 4 to 1, basically 4.5 to 1 in an oil stock if you want to take this kind of pattern alone. But ultimately, I still think, again, this has the path to go to like 100 before we have a bigger pushback. But then ultimately, again, if oil does what I think might happen again in 2026, this one here could easily rally as well. So low risk, high reward entry there for sure. So still, in my view, also somewhat of a no-brainer. Breakout from a 2-year bottom into a bull flag breakout again, continuation. And we can also put the 30 weekly moving average, which in my view is the best moving average to use. If you want to use a moving average, the 30 weekly or the 30 period is the best. You can clearly see here we're pushing up, and yeah, the likelihood is we're gonna go higher. Momentum wise, bull flagging into the above the 0 line, breaking out higher, meaning we're also again breaking out against the longer term momentum for SCR. So a clear winner in my book here with this type of price behavior. SD, again here, not the most pretty of the pretty, but once we start to clear that, you can see we have a big kind of wedge coming down here. We broke that a few times, and finally we again said, hey, we want to break like 12.7, maybe even a bit higher, and you can see we're trying to break out here. Again, this is not, compared to the other two, I would definitely choose between EC and SCR, because this is a bit messy. But once we start to make green candles above that 12.7 or so, like a weekly close, then we have definitely been breaking that kind of bottom structure that we're looking at here. You can see we are trying to break the neckline there at 12.7. So it is really trying to, and I also believe that we're gonna go higher here as soon as we close above. The safety line for this one here would be something like, you know, the trend line coming up from below here. As long as we're above that, we're in somewhat of a decent shape for SD. Here we will go into, oh, this is gorgeous. This is absolutely a banger. Finally, I will say finally, we have one of the biggest triggers we have ever seen in the Brazilian stock market. And I will do more analysis on this in, you know, a video alone, because again, this is a 20-year breakout, and this one needs a bit more in-depth, kind of like a video for itself, which will be up on the Substack later today. Amazing long-term position you can take in the Brazilian stock market. Heavy commodity, you know, what's it called, weighted, and they pay heavy dividends. You know, this EWC here, 5 years hold, 10 years hold even. You don't need to do a whole lot other than, in my view, check out that video and see if that is something for you to play. And I think it should be a part of your portfolio. It will definitely be, and is already, it will be a bigger part of my portfolio going forward in dividends and, you know, commodities and all that good jazz. So here we have Dolly Varden. Bit more of a tricky one here. This is not like a breakout, you know, kind of thing moment there, but I think if you want to add into Dolly Varden, we kind of like broke this whole funky little wedge kind of thing to the upside, and then we came down with everything else, basically back testing a billion kind of like supports and moving averages and all that good stuff. So I will say adding here at roughly 5, you know, 5.5 where we are today, does actually look quite good for Dolly Varden. If you want to wait for like a channel breakout, you can see here we're definitely wedging into this kind of back test thing. So if we start to clear basically 5.7, again getting back above, you know, we do the back test here, we get back above the overall wedge at roughly 5.7, 5.8, you go long Dolly Varden, you have a stop below 5, and you basically take the entire upside together with the entire gold and silver complex, which has way more to come, way more to come. for the next years to come. And that will all happen once we break down from the 4-year bear flag in the gold to silver ratio. You know, below like 78, maybe below 80, this will trigger a cascading effect where we will see 65, then later 30, and then below that at some point in time. And the miners is gonna outshine everything during that period. There will not be a better investment than the mining sector when we see that. GSAT here is also still one that I want to show you. This is like a space stock. It is at least in these. There is a space ETF. So this is wireless communication. Big company, no dividends, but that is okay. This one here is more like a price play. Look at kind of like the level here, 44, getting finally broken out there. Boom, break above that one. Go to the monthly. We might even get a better view. This one here is a clear long-term investment. We've done a bit of more detailed stuff on this on the Substack as well, but this one here is the start. We might do a little bit of a flag here, you know, sitting above that whole support thing, but again, I wouldn't be surprised to see this one go way higher given a 10-year plus kind of like base going on there, right? And we're finally getting ready to pierce that and actually go higher. I think, again, if you want to be in this kind of stocks, GSAT is a must-have. It's an absolutely must-have in that kind of portfolio or investment type. So yeah, again, this one here, we have done multiple. We have done multiple views on this one as well. I just want to keep it as a reminder. This is still just getting started, even though our signal was 44. We're sitting at like 50 now. It's still very early. You don't need to be that precise always. This one here is still, as long as we are above here and actually see this is the 30 monthly coming up, this one should have a long way to go. Yeah, so again, follow me on Substack. That's where we do the detailed stuff, and I wish you all a really good day wherever you are in this crazy world. So cheers, guys.